Here we go. All right, let's take a look at it. So we're in this move right here. Here's a projected short that I went over this morning with you guys. That's a projected short at that yellow trigger candle right there. All right, why was that a projected short? Why did I say that would be a trade to take when that yellow trigger comes up? So I was talking about it at 8:15 this morning to 8:20 at this level. Here's where price was. I said if we close outside of the line in the sand, meaning the outer edge, these zones have been tested for the past 30 years as the best zones, this green zone and red zone, to be the best price to reject price and to hold trend, meaning price should react off of these zones. We should go right back up after these zones. If zones are red, it should go down. If zones are green, it should go up. This is called a line in the sand trade. I call it a failure trade. So this is the line in the sand for the market. This happens on a week-to-week, daily basis on all markets. You're going to know the exact breaking point in the market every single day on any given market that you trade. This is the line in the sand. It's been tested for the past 30 years on the S&P as being the best zone to reverse price. So we knew that going into this before it broke. So that's our line in the sand right here. So what I said on the microphone just before this happened, I said on the microphone that we're looking for what's called a failure trade if this line in the sand breaks. So we're talking about it right in here on the mic, right here before price even broke through it. What I said is that the smart money have been grabbing liquidity shorts on the big trend chart. So to our right in the trading room, we have a big liquidity grab chart. To our right. So a big liquidity grab chart. Look at this. Look at price just getting cranked into my big pocket. I projected this big pocket this morning too. Our target's down to 65, guys. No demand below us at all. There's no demand. Look at this market run. This is great. All right, hold on one sec. Let me get this so we're make sure you guys got this right. Large liquidity grab chart said that the smart money's grabbing liquidity short. We only have two setups, right? We can take failure trades when it breaks a line in the sand, the outer zone, with the yellow trigger here, only with big, large liquidity grab trend. So large liquidity grab trend, they've been shorting the market. The smart money has been grabbing liquidity since 12:25 yesterday. 12:25. They've been shorting the market. Right now it's 8:44 Friday morning. At 12:25 Thursday, they've been shorting the market. Look at these big distortion in prices. Big distortion prices are liquidity grabs. So what I said this morning was this candle was green. It was green, all green, right? The current candle. I said we don't look at that current candle. We look at the previous candle to see where they've been grabbing liquidity. That current candle is turning green because they're trying to grab liquidity. It was ticking all the way up here at 04, 03, 02. The smart money was grabbing liquidity to bring it back down and it's just to drill the market, to take out the counter trend traders. These distortion in prices on our large liquidity grab chart, this is where they grab liquidity. So you don't look at the current candle in the large liquidity grab chart, you look at the previous candle. I said it's red. Since it's red, the smart money's been shorting the market since 12:25 yesterday. What does that tell me? It tells me if I break my line in the sand on my algorithm and I get a yellow trigger candle, and we talked about this before this even came up. We talked about this in here. I told traders on the microphone this morning around 8:15 to 8:20, 25. Before this even came up at 8:35, I give you a big 10 minutes heads up. If we break this, this is a what's called a line in the sand break, but what's called a failure trade. So here it is. Let's take a look at it. So what it did, the yellow trigger came in at 89.25. Right there it is. 89.25 was a yellow trigger candle right here that came on our chart. This was your short. That's where the yellow trigger candle came in. Right there. So it's a failure with big trend chart because it broke our outer zone. If you break my outer zone that's been tested for 30 years in the market as being the best zone to reverse price, guess what, guys? Don't make it difficult. If it's been the best zone to reverse price and keep S&P trend out of tons of trades, and if you break this zone and you get a yellow trigger, guess what? And it's with the big, and you only take this trade when you're breaking the outer zone. You only take this trade. You only take this trade. Muscle memory, muscle memory. We only take this trade. Muscle memory, muscle memory. We only take this trade. If it's with big trend, smart money, liquidity grab, direction. You only take the trade with smart, big money, trend direction. You only take the failure trade with smart, big money, trend direction. If they've been grabbing liquidity, they've been grabbing liquidity shorts since 12/25 yesterday. So if you break the outer zone, keep it simple, KISS method. If you break the outer zone and you get a yellow trigger candle, that's failure with big trend. Set it up for you guys. Talked about it right there before it even happened. If it comes up, look for failure with trend, you're good to go. Now, we really only have two setups in the trade room. We have when it breaks the line in the sand here and get a yellow trigger candle with big trend. You don't want to take it against big trend. You never want to take failure trades against big trend because you're not going with the smart money side of the smart money. You don't want to take failures when you break the outer zone, the line in the sand, unless it's with big trend. All right, the big trend chart only does so much. My zones do all the rest. The key are my zones. That's the zones. These zones are vital to us, our trading. So when my zones are broken and I get a yellow trigger, which we did, there's your entry right there. Your fill's 89. 89 on this move. It's got as low as 67. We knew 10 minutes heads up that we have a possible crash in the market. And because my pockets, which I'll show you, told me it could go down to this level. My symmetrical wedge, I just went over it before the break, where the targets are, and it just hit them. So now what you can do with the algorithm, I have an update for all you members that will get this failure with trend. I only got one contract here to show you, but only have it with one contract showing an example with a profit target, a stop loss of $100 per trade, and you can do a target of $100 per trade or 200 or 300, what have you. But just to show you the example, the algorithm will automatically get you in the first liquidity grab after a failure has happened. The new update with you guys on the algorithm will only take trades with overall trend direction of zone trend. So zone trend turned red. So after the failure trade, the yellow trigger came up, it got filled right there at 85.25 short. And like I said, I just showed example. You can have runners on this. I'm going to show you how to do a runner when this next trade comes up, members, because right when this short came up, you're going to get a red line that comes up with your profit target and a blue line, a red line with your stop loss target and a blue line with your profit target that come up like this. What you can do is you can click, and as this price moves down, it goes right on top of your chart. I'll show you when the next trade comes up over here. You can move your profit targets and your stops on top of the chart now, which is cool. It's a neat little feature. Okay, so what are we doing now? What trade are we only have two setups. We have failure with big trend. We only have two trades in the room. Failure with big trend. That's our big liquidity grab chart. And then we have what? V top, V bottoms with trend. With the first liquidity grab. So what are we going to do? That's only 2 trade setups in a room on a daily basis, over and over and over again. That's all you're going to look for. So you don't even look for failure trades, breaking the outer zone. Like right here now is our line in the sand right here. Here's a line in the sand in the market. Here's our breaking point in the market to the upside. That's our line in the sand. But if it would break out of this line in the sand, would we take the trade? No. Why? It's not with big trend. Our big trend chart says the smart money's been grabbing liquidity shorts since 10:25 yesterday. So this is our new line in the sand, just like this was our line in the sand on the outer edge when it's green, right? The difference is we trade the break of the line in the sand here. We trade this break with the first yellow trigger candle because it's with big smart money trend. We don't trade the break of this line in the sand because it's not with the big trend. That's simple. Don't make it any more difficult than that. Let the algorithm do all the work for you. So we want to take failure with trends right here. This is failure with trend, failure with big trend. This is not failure with big trend. The second trade we have is coming up. The second trade we have is called a V-top, and we'll look for the first liquidity grab. So right now, it just did the first V-top. Here's your first V-top with overall trend direction. This is the second trade in the room we have. This is our main trade setup. So what the algorithm is going to do, V-top just came in. You can short the V-top if you want to here at 70 3/4 when it comes in. Or you can let our automated strategy wait for the first liquidity. It's grabbing liquidity right now. It's going to enter short. If this turn closes red, it's going to enter short. This is a first distortion in price right now. If this green candle closes red, it's going to enter short. We're seeing they're trying to grab liquidity right now. All right, so just grab liquidity. Now, what you can do is when you see these levels, you can drag this red or blue profit target. So a red profit target a red stop loss came up, and then a blue stop loss came up. Blue profit target came up. If it hits a blue profit target, if it hits a blue target on a closing basis, it's going to get you out of the trade. If it closes above my stop level that I have of $100 per exit per contract on a closing basis, it's going to stop you out. So this is the second trading we have. We have this for our automated algorithm that you can use. So if we close below this level on a closing basis, it will pop out of the trade. It just closed below it. Now that's our first liquidity grab short. It just closed out of it, and that closed out the position. So you see that red and blue line that just came up, you can adjust that. You can click on it. So let's say you want $500 per one contract, and you want to have $100 stop loss per one contract. What you can do is click on your chart. You can trade off of one chart now. You can click on that level and move it to where you want it to trail it. So if you wanted to trail price, you can keep trailing it. So if you want to keep the stop loss above this level, and until you get, if you're doing 2 or 3, 4, 5, 6 contracts, until the first liquidity grab, and then click it below here to trail, it will get out of all your contracts wherever you click and trail that contract. Those lines come up automatically. The difference is now you are allowed to move your stop as a trail now. You can trail it. You can trail your stop on your entries, which is awesome. And you can trail your profit. You can place your profit targets if you're doing multiple contracts. So you can see the two different trades I said that's coming up in the room. I said failure with trend, V tops, V bottoms. We talked about this right here on the microphone before this even came up this morning. I said, hey, the big trend's down. The smart money's pushing this market down since 10:25 yesterday. How did I know that? My big chart. The large liquidity grab chart says since yesterday, since 12:25, all these distortion prices, smart money's pushing it down. So that tells me when my smaller Renko, my zones that have been back tested for 30 years is the best zones reverse price. Guess what? If they don't reverse price and the zone breaks, you got a failure. The zone is failing. I call it a failure trade, which is right here. Here's a breaking point in the market. Failure with big trend. Big trend's down. Smart money's pushing it down. There's your first yellow trigger candle that came up. Your entry was right there at 89. And the market crashed all the way down to 67. Then if you want to use the automated algorithm, you have a couple opportunities. Now I just have, like I said, a simple $100 stop loss per contract and a simple profit target just to show you examples today. Like obviously you can use a trailing technique, use more contracts and so on. You saw the red trailing line that comes up, you can trail it. But it'll take the first liquidity grab failure short here after a failure comes up. Or you can wait for my next trade setup, which is the first V-top. And it'll take the first liquidity grab after the V-top. Pretty cool algorithm that does all the work for us. You just got to make sure you don't take failure with trend on failure trades against overall big trend. Let my zones do the work. These zones are vitally important to your trading success. These zones are vitally important. If they're red, we short. Red, we short. If they're green, we buy. Don't make it any more difficult than that. Red, short. Green, buy. Red, short. Green, buy. If the dual trend filter says it's opposite color, green, red, or red, green, then it's chop. Let's take a look. So simple to watch these trade setups come up. And they're very leading. There's my failure trade. Failure trade with big trend. You just got to watch for these two setups, guys. Repeat over and over and over. All markets, every day. Don't make it any more difficult than this. Right there it is. That's a trade I set you guys up on before it happened. Smart money move. That's a smart money move. Failure with big trend. Then the next setup I said would be what? Once it turns red, our dual trend filter, once it turns red, red zone, red inner dots. I said red, once it turns red, we'll look for the first counter retracement. Let all these counter trend traders come in the market. Come on, counter trend traders, come in the market. We know counter trend traders are opposite what we trade. If they're buying, we're selling. If you're a counter trend trader, we want to thank you. Our members would like to thank you for being a counter trend trader because you create order flow for us. When you're buying, we're selling. Counter trend traders, thank you. Buy, we'll sell. You sell, we'll buy. All these indicators that are on NinjaTrader, TradeStation, Thinkorswim, all these are designed for us to lose. Why? They're all designed to counter trend trade the market. They said, hey, the market can't go any lower than this or any lower than this. The MAC is turning up here. No, it's at a Fibonacci level. No, it's at support 1. It's at S2. It's at a Woody's pivot. It's at some crazy indicator, right? That's telling us to counter trend trade the market. No. We're smarter than that. We're going to short low and cover lower. We're going to short low down here. The market crashed down. So all the traders out there that counter trend trade the market, they're saying, oh, it can't go any lower. No, it can't go any lower. I'm at a big 62% retracement. I'm at a 1.272% retracement. I'm at a harmonic level. I'm at a Elliott wave 5. It's got to reverse. Nope. They push it back up and they take all those traders to the woodshed again. Why? It's about order flow. Smart money's pushing this down. They're grabbing liquidity and they keep pushing it lower. So our next trade that came up, all green. I said look for the first V top. There's your first yellow trigger candle again. Here's your second trade. This is V top. You take the first liquidity grab short, which my algorithm got. Automated algorithm you can use. There's my two trade setups for the day. We're 2 for 2 starting out for today. And it's been nice trades. Now, why were these important levels? Because we're in pockets in the market, right? So there's my line in the sand. We close below it, yellow trigger, failure with big trend. Come down, I said the next trade setup would be a V-top. I said the next trade setup, as we fall down here, I kept asking traders in the room, what's the next trade setup? What's the next trade setup? Well, it's easy. It takes a half a nanosecond. It's a V-top. Why? Why is it a V-top? Don't make this difficult because we're red, red. Red outer zone, red inner dots. We are trending down. We do not buy red, red. We short red, red. We let the amateur traders come in and push the market back up, the counter trend traders, and we're going to go with the smart money. Smart money's been pushing liquidity grab down. So what do? Wait for the first V-top, take the first liquidity grab short. Now, you can do it with our automated algorithm. Automated algorithm got short here on liquidity grab short on failure with trend. It will take the first failure with trend, or you can wait for the first V-top and it took the first liquidity grab short here. And you can trail this, do as many contracts as you want, put your stop loss where you want. This looks at the dollar value and the profit value on this. As you can see, this trade is working out really, really well. Now, do we worry about this line in the sand if it breaks? Will we take a failure with trend with this line in the sand and just move down to here? Will we take this line in the sand if it breaks? No. Why? It's against trend. These are the two critical points in the breaking point in the market here. Here's the first breaking point. I caught it before it happened. I told you guys in the microphone, that's the first critical breaking point. That's a big short. Second, as we're going down, I said the next big critical point will be a V-top. First liquidity grab, nailed it. That's 69.5. Low is 60. It's moved almost 10 points down. These are the two trades we look for in the trading room, over and over and over again. We can use the automated algorithm to assist in getting our entry because of the fast fills, and use it for our stop loss and use it for our profit targets. Okay? Now, let's take a look at why I projected these big runs. Why I projected these big runs. Before this trading session even starts, before I even talked about this trade, failure trade coming up, and before I even talked about this V-top as our next setup coming up, you need to set yourself up. You need to set yourself up for success, right? Traders don't plan to fail, they fail to plan. And I'm telling this because I've seen tons of traders over and over again. They don't have a trading plan coming into their trading session. Traders don't plan to fail, they fail to plan. You need to look at your roadmap. The first thing I did before we even talked about taking those two trades is I pulled this up. I said, listen guys, here's where the market's at. We're in a balanced market right there. Balanced market between a daily high value, low value. If we get outside this balanced market, we get a big hole in the market, these gaps below us where there's no trading participants. So I marked this up for the traders. I said, listen, we're in a symmetrical wedge, 2 higher lows, 2 lower highs. The apex was getting close to being broken right here. I said, we'll take the distance. I did this before the breakdown even happened. We'll take the distance here, and we'll take it to the breakdown, and this is going to be our target. I said, that's our target right here, and I marked this up. This is way up here before it even broke. At 94, way before it broke. And I said, here, if it breaks out above, that's our target up here. All right? Look what happened. We broke the symmetrical wedge, get outside my low value area, which at the time was right here. It moved down here now. And I had a big gap in the market. No trading participants at all. Went right down to my target. So when traders, when traders come in, new traders, they say, there's no way that this market can break 94 and get down to 64, 20 S&P points. There's no way. Well, I just did it. And we projected it to go there for our daily target. Why? We're using market profile. All we got to do is we look at the previous market profiles like this to find balanced and imbalanced markets. And all we got to do is look at where my market profile levels are before we even start trading and we put these lines going forward. And I did that for traders this morning. I put these lines down and said, hey, here's our pockets this morning. Target there, target here, target here, target here. Here's our upside targets. Here's our downside targets. If we break the symmetrical wedge, this will be our ultimate target. We just nailed it. So then we had a roadmap to see where there's no, remember, these are electronically traded markets, okay? Don't make this difficult. These are where all the trading participants have been over the past couple days. So when you don't have any trading participants, it creates holes in the market. It creates holes in the market where there's no demand, none. Demand is not Fibonacci levels, guys. Demand's not the MAC. Demand's not lagging moving averages. Demand is not, pivot levels. That's not demand. Demand is where actual trading participants, right? It's called low volume nodes and high volume nodes. Where's the low volume activity? Where's the high volume activity in the past? That's going to create holes in the market. You get holes in the market like this. You get inside of these holes. You get one of my two setups that come up, trade them. And now you have targets. So I projected this target to be down here at 65 from the break in 94. Nailed it. All right, because my two setups came. My failure with big trend, my yellow trigger is right here. They came in, that's to short. And the only reason you would short that yellow trigger candle that came up, yellow trigger short candle, it's broke my outer edge line in the sand, listen, with big trend, big smart money trend. You don't take, and I'm going to repeat myself, you don't take line in the sand trades that break against big trend. If smart money is shorting, we're shorting with it. Don't make it difficult. If smart money is buying, we're going with the smart money liquidity grabs on our smaller Renko charts like this. Why do these yellow triggers come up? George, you have a question. Why do these yellow triggers come up? They come up because it's a break of previous support or resistance. We are breaking the low here. This is a big level low. Right there, George. Yellow trigger fires right when it breaks. It's breaking some previous low or some previous high, how I have it programmed, to put us to catch the wrongly positioned traders. Because what I want to do, that we know order flow, there's going to be what? If the wrongly positioned traders bought here, then their sell stops are going to be right below this low, right? They're going to be right below this low. So how I developed with the yellow trigger candle is you break some previous low or previous high, it's going to fire off a yellow trigger. We want the yellow trigger to fire off right when you're breaking the line in the sand with a big trend. Okay? Now, right when you get a trade that comes up, like right now, it's in a liquidity grab short again. Here we are. You're going to get a red line that comes up and a blue line. A blue and a red profit target line. The algorithm's designed on a closing basis if it hits that line. So if it hits that line on a closing basis, it's going to fire you out of the trade. It's going to get you out of the trade on a closing basis if it does that. So we really only have two trades in the trade room. We got a failure with big trend, and we got a V top and bottom with the first liquidity grab. The first liquidity grab. V top and bottoms with the first liquidity grab short. Okay? And we look for these with overall trend direction. So just always stick on the side of my zone trend. That's how the program was designed. If it's red, my outer zone's the most important. My inner proprietary Renko bar type, if it's red too, we're trending hard down. This is trending hard down. So when it trends hard down, what do you want to do? Look for the first V-top that comes up. Let the counters come in. First V-top. There's your yellow trigger for the V-top. Or wait for the first liquidity grab, which comes right after the V-top. Failure with trend we just talked about. Okay, Gerald, shut that off. All right, are we all on the same page? Yeah, let me look at the next gap. Are we on the same page? So guys, when you're doing the liquidity grab here, here's our second liquidity grab short. Here's our second V-top. So we have two V-tops today. George, the key for your success, this is the key for your success in this room. You need to know, understand at all times where the breaking point in the market is to the other side of the market. So if you're shorting, you got to know when it reverses positions. So there's a line in the sand right there. That's my outer edge. It's going to tell us where the breaking point on the other side of the market possibly is. The other key is that you don't want to take any trades when it breaks a line in the sand like this if it's against a big trend. Do you understand that? We don't want to take any trades against the smart money because you're fighting the smart money, and you don't want to do that. That is the big institutions, the big banks, the big hedge funds, and the big algorithms, the Goldman Sachs Delta programs. You don't want to fight those guys, or you're going to get taken to the woodshed a lot, right? So what we want to do, we only want to take a break of the outer zone if we get a yellow trigger candle if it's with big trend, my big trend chart. Let's make sure we got that right. Secondly, you don't want to take any V-tops or V-bottoms against zone trend. So if it's red, we only want to take V-tops with the first liquidity grab short here, V-top, first liquidity grab short there.